Welcome everyone. In this video, I'm going to be discussing the very basics of the averages and why they're important. Um, I don't have this video scripted, but I do have some notes, so if I sound like a robot, I apologize. I just want to make sure that we do go over all the notes in the video. Um, but just kind of winging it for a moment. Moving averages are some of my most important indicators I've ever used within trading. They tell you a story of where the market is taking that symbol in ways that really nothing else can. I have been able to determine bottoms of stocks. I've been able to determine tops of stocks. I've been able to determine when a crash is coming, all from these moving averages. And it's something that is extremely consistent. They have historical trends, and it's something that is highly respected within not just the trading community, but by the actual trading algorithms from these larger funds, these dealers, and the big money essentially follow these levels almost to a T. We have seen uh, bounces and rejections off of these moving averages literally to the penny. And I mean that, directly to the penny. So they have been a tool that has been um, beyond immense in my ability to trade, to be able to predict and overall read what is going on with a symbol. So, with that said, I just want to quickly go over my notes. And again, this is only going to be the introduction video. This is going to be a series of many different videos. And um, for those who are interested in following the other videos, they are going to be behind the Patreon subscription, which is $12.99 a month. It's less than 43 cents a day. I'm sure many people in the comments will be able to vouch for the types of lessons that I will be able to teach you through these videos. But let's just go over some of the things I wrote down of why these are so important. Not just, these aren't just reading leaves. This is something that is very, very historic. It's a trend that you can track each and every day, and it's very consistent. So, with that said, let's get right into it. So, moving averages are averages formed over a period of days to create a trend indicator, and these trend indicators can tell you whether a symbol is turning bullish, bearish, whether it's short-term bullish, whether it's long-term bullish, and same with the bearish side, whether it's short-term or long-term bearish. These trend indicators are lagging as we get the value from previous closes, which by that I mean each session will give you a new moving average. So if I closed, for example, SPY closed at 609.70 on this previous Friday that I'm looking at, and the 5 which is our closest support. I know many of you watching this will not understand that fully, but the 5 is our closest support and it's at 606.59. Because the SPY closed at 609.70 at a higher level, we can expect the 5 to close or to open at a higher level because we had a higher close. So it's based off of where the symbol closed the previous session. Okay, and that's very important to understand. Now, moving averages help define trend direction without the standard trading noise. And by trading noise, I mean the smaller time frame movements, volatility, just overall, basically like for example, the 30-minute chart. I mean, we have all sorts of up, down, up, down, up, down, up, down, dips, all sorts of stuff. We're not concerned with that. We're concerned with what's going on the daily chart. I don't really care about the noise within uh, the daily session itself. I'm caring more about what's going on with these larger levels and trends. Um, So just a kind of rule with moving averages is that they're only to be used with the daily time frame. For what I'm showing you here, it has to be the daily time frame. Now, you will be able to apply these to smaller time frames after you get the daily level. Um, Whether you have to write that down, it does not matter, but you have to use the daily level. Okay? You cannot use the hourly, you cannot use the 5 minute, you cannot use the 30 minute. It must be the daily level. Um, what these levels will tell you, if used within the daily level correctly, is where major support resistances are, uh, depending where the market is in conjunction of with the moving averages, right? Um, Now, why are these levels so important? The market dealers, and I've explained dealers before, but dealers are, the market makers. They are the ones providing liquidity to the market. They buy up and down, they sell up and down. I mean, they're moving levels to where they need to move it to. Uh, that's what these moving averages will help track. And those dealers heavily respect these levels. As I mentioned before, we've seen some of these levels get directly to the penny and have a bounce off of that level to create a support. And overall, the moving averages just tell us where the market is pulling the support and where resistances are going to be forming. And it's a great tool. I have probably hundreds, if not thousands, of people who can vouch and say that the moving averages are probably one of the most important tools that I've taught anybody and that they have learned. So I hope you all will join on the journey of learning the moving averages and learning how to read them. I will be happy to teach you if you come along with me. So with that said, I hope you have a great day or night, and I look forward to learning with you. Thank you.